Traditional distribution channels are unable to serve the needs of this customer segment, and D2C or online doesn't really work because of poor awareness levels. So what we essentially do is we work with existing distribution chains, organizations which have a connect with this customer base and are selling some kind of product to these customers, right? So for example, a farm input company providing fertilizers or pesticides to farmers, or microfinance companies providing credit to rural women to start small businesses, or e-pharmacies or local clinics providing primary health care to people. Now, there is already a trust established between this organization and the end customer over years and years of relationship. What we do is, through our technology platform, leverage that, work with our insurance partners to design the right products, the right coverage, the right pricing models, and then manage the entire administration of those programs through our technology platform.
Hello everyone, welcome to our video series. I'm Sudhanshu Anand. I lead FinTech and B2B investments for Orios Venture Partners. In today's episode, we have Vikul Goyal, founder at Bimaplan, with us. Bimaplan is an Insuretech player operating in the underserved segment. This is in fact Vikul's second startup. His earlier startup, Car Crew, got acquired by TVS. He was also an investor at Orios Venture Partners earlier, and he's now building Bimaplan. In today's episode, we are going to discuss with him financial inclusion and the role of insurance in the same. Vikul, before we deep dive further in this issue, I would like to understand the motivation and the sentiment behind starting Bimaplan. You started Bimaplan back in 2020. What was the trigger, and why did you build a solution exclusively for the underserved segment?
Thank you, Sudhanshu, for inviting me. It's a pleasure. I'd like to share an anecdote with you, and in fact, let me read it from my phone. So here it goes. The guy who used to deliver newspaper to our house just called us. There was some balance left which he had come to collect from all his customers. He was trying to wrap up everything and go to his hometown in Jharkhand. I asked him if it was easy to get the train tickets. He said there were no trains running. He told me that he's trying to get on a goods carrier, a 20-foot trailer, to go to his hometown, paying 3,500 rupees. A few people had gone back, so he's trying, along with some 80 others, to do the same. He also mentioned people have gone to UP or Bihar in auto rickshaws. More than 500 autos have gone. Takes about 12 days. And many have walked, as we know from news reports. This is a really sad state of affairs, and I can't bring myself to understand how we as a civilized society have allowed this to happen. This is perhaps the biggest class divide that I have seen in my life. We thought that the virus was a great equalizer, but with most calamities, the rich and the powerful, including ourselves, get a disproportionate share of the constrained resources, and the poor and the marginalized are left to their own devices. This is not the development that we want for us and our children. There has to be a new social order emerging out of this, which gives basic dignity of life and basic social rights to all citizens alike. So Sudhanshu, this is a message I sent to my WhatsApp family group in May 2020. And this event, I think, became a seminal point in the founding of Bimaplan later. While we were all comfortably sitting in our homes during the lockdown, a large part of the population was struggling. They had no income, or they had lost access to income because there was no economic activity. The healthcare expenses had increased due to increased hospitalization, and people were dying. And therefore earning members were dying, and which led to loss of income for those families and they were being pushed down to a virtuous sort of poverty cycle, right? And I kept thinking about this for many days after this, and everything else became meaningless. And I realized that this is something that I want to build. I wanted to do something that improved the lives of these people who did not have as much access to financial resources, whether that's credit, insurance, banking, or people who were not financially included, right? So I called my friend Sanjay, and so Sanjay has worked with Allianz and Reliance. He headed marketing for both of them in India, and he was the only expert in insurance I knew. And I was like, Sanjay, why do poor people not have insurance? And he started laughing, and he's like, this is one of the most difficult problems, or this is one of the most difficult questions that you've asked me. And I said, yes, but I want to build this. And that kind of began our journey of discovering the problems or the gaps in this market. And we spoke to a lot of people. We spoke to a lot of insurance executives, investors, and operators. And we kind of formed our own thesis around why there was a gap in insurance penetration in India. And we applied to Y Combinator. We got selected without a product, without a team. And that began our journey of building that product. Initially, we were learning as we were building as to what are the products that need to be built, what are the different channels through which we can acquire these customers, so on and so forth. And that Y Combinator was very helpful in that journey, in sort of thinking about the problem from first principles. And then, we launched the product during our YC journey, acquired the first 1,000 customers in the first 3 months. And that also kind of gave us the confidence that yes, we could do that at scale. And that's how our journey began with Bimaplan.
That's quite a trigger, Vikul. In fact, I think all of us kind of faced the impact of COVID-19. Not with the same magnitude, but the pandemic has changed things a lot. Now, coming down to the financial inclusion in India has moved significantly in terms of financial inclusion. We now have 50 crore bank accounts, up from 14 CR back in 2015. That's under the Pradhan Mantri Jan Dhan Yojana. UPI has taken over everyone from a shopkeeper to a vegetable vendor. But still, we have about 160 million people who are credit underserved, and 400 million people don't have any kind of insurance products. Can you share your insights on why such a large population is still underserved?
So, Sudhanshu, there are always two main components which decide access to a good or service to any segment of people, right? So in the case of financial services, the two, as in the case of financial services, those two components are product and distribution, right? Now, let's take the case of product. Yeah. Formal financial institutions until recently did not have access to the right data for them to be able to underwrite that customer segment, right? And create the right products for them, right? Which has now changed with the launch of digital public infrastructure in India, whether it's the UPI, Aadhaar-based KYC, account aggregator, and so on, right? The second is, again, the distribution. A large part of this underserved segment lives in rural India or small towns and villages, and there are no physical touch points in those geographies which could help these formal financial institutions distribute their product. So product distribution was very expensive. Now that has changed with penetration of mobile phones and access to cheap data in India, which is creating this whole financial inclusion revolution. Now, as far as insurance is concerned, see, in the journey of financial inclusion of any particular individual or a household begins with access to capital, some form of capital, whether equity or credit, right? There is no equity, so it has to be credit. That leads to consumption, right? And saving, and then protection of that saving or asset that has been created with that, right? So that's sort of the journey. Now we've kind of made progress on the credit front with a lot of the progress made in microfinance, in digital lending, NBFCs and so on, and in access to banking services, like you mentioned, with the proliferation of the bank accounts through Jan Dhan Yojana and so on, and digital payments and the like, right? Now, then comes insurance, right? So I believe that this is the right time this is the inflection point where the latent demand for insurance will increase, and the penetration of insurance will also increase over the next 15 to 20 years. So now, everyone talks about low insurance penetration in India. So let's specifically understand the gap in insurance, right? We all know that insurance penetration in India is low at about 4%. What does that mean? Insurance penetration is a macroeconomic indicator which tells us the level of development of insurance industry in a particular country. So India, it is defined as the total premium underwritten divided by the GDP, right? So India stands at about 4%, US is 12%, global average is at around 8%. So we are one of the lowest insurance penetrations in the developing nations. On a standalone basis, it doesn't tell much, right? You need to kind of go deeper to understand what that really means. So you have to understand the access to insurance, what percentage of your population does have access to insurance, and the level of coverage that the population that has access to insurance has, right? So in India, roughly about less than 20% of the population has any kind of life insurance coverage, which is abysmally low. More than 40% of the population does not have any kind of health insurance, which leads to high out-of-pocket expenses. In fact, in India, we have about 70% out-of-pocket expenses in healthcare, which is one of the highest in the world. And that alone can lead to families going into poverty. In fact, there is some statistic that I read where 7% of the families in India go into poverty due to healthcare expenses alone. Now, those who have insurance are not adequately covered. This is measured by an indicator called insurance density, which is essentially the total insurance premium divided by the population. In India, it stands at about $90, whereas the global average is about $900, and US it's about $8,000, $9,000. So you can see the massive disparity between the level of coverage that exists in India versus the rest of the world and the developed economies like the US. Now let's go one level deeper and talk about product and distribution. More than 70 to 75% of life insurance in India is sold as an investment product. And the reason for that is people did not have access to the markets, and this became sort of a low risk way to invest your savings, right? With guaranteed returns in traditional products or market linked kind of products. The protection products only became popular over the last 10 years, and still their contribution to the overall premiums is very low, right? In terms of the distribution, 85 to 90% of distribution is done through traditional channels such as physical agents or banks or corporate brokers. Now these have high fixed costs and therefore they are unable to sell low premium affordable products to people in tier 2 and beyond locations. This is, if you look at it, a virtuous cycle. There is no products and therefore distribution channels have not developed. And because there is no distribution, insurers are not building the right products to cover those segments. And that has been the case over the last 20 years since privatization happened. And insurance companies have largely focused on the top 20% of the population living in urban centers, tier 1 cities and metros and so on.
No, I absolutely agree with you, Vikul. I think insurance is at that inflection point, and I think the next phase of growth will only come from, Bharat 2, as we call it. And I feel it's not just the increase in per capita income or TPI, but it's also the massive regulatory push that we have seen over the last couple of years. Whether it's the Insurance for All by 2047 mission, Bima Sugam, or Ayushman Bharat scheme, I feel all this will change the landscape significantly. And that's absolutely a crazy number that you just mentioned, that every year 7% of the population is pushed below poverty line because of any healthcare emergency. Now, do you think that microinsurance and microfinance can play a role in solving this issue?
So Sudhanshu, this is absolutely audacious goal set by the insurance regulator to provide relevant insurance products to all citizens by 2047, 100 years of independence, right? And in order to be able to achieve that, you need to find alternate ways of reaching out to those people and creating that awareness about what is insurance, why is it needed, and delivering those relevant contextual insurance products to the end users. And any organization that has a connect with the customer has built trust over a period of time should be leveraged to provide access to insurance for these customers. You've talked about microfinance. So there are more than 200 microfinance companies in India. They serve about 5 to 6 crore people or households, and disburse about $15-16 billion of loans annually. Now that's a massive reach. Now, can we leverage that distribution and reach and trust to also provide insurance to those customers, right? How do you do that? They are not insurance companies, they are not insurance distributors, they are lending companies focused on lending. But that's where technology comes in, right? You build the right platforms that these companies can use to efficiently bundle insurance products or cross-sell insurance to their customers, which will do two things. It will provide access to affordable products to their customers. It will enhance the trust that they already have with their customers because they're adding more value to their customers' lives. And it will also add a layer of monetization and increase their profits or margins, therefore making the overall operation more sustainable. Similarly, RBI gave licenses in 2016 to form small finance banks, which are primarily established to serve this population, right? And they will become a major instrument for delivering financial services, including insurance, to this segment of the population.
Understood, Vikul. I think the awareness around financial and risk mitigation tools in India is fairly low. In fact, around 55% of the rural population is unaware and uninsured. Do you think access and awareness go hand in hand? Like, you have to make the product accessible and then make the population aware about it at the same time. What are your views on this?
See, insurance is not an intuitive product. Essentially, I'm asking you to pay me today in return for a compensation that I will give you in case a particular unfortunate incident occurs, right? So first, it's very difficult to wrap your head around what is the probability of that event occurring, and then if that event occurs, will I get my money or compensation as per promise? Will you be around, and so on. So trust becomes very, very important, right? Where the person who's creating the product and the person who's selling the product, do you trust them, right? That's one part of it. So you need to have the product in order to be able to talk about it and create that awareness, that education about why it is necessary. And a lot of it is also happens when you see behavior around you. My neighbor or my colleague got a claim paid, and therefore that travels within the community, right? People get to know about it. Word of mouth is very strong in these communities. And therefore, this is what we call the 3 A's of financial inclusion. Create access, create awareness, and build affordability. Because if any of these is missing, you're not going to be able to create mass adoption of these products, right? Which has been the gap so far. And with technology, with internet, and with newer sort of distribution models emerging, you resolve these gaps and create deeper penetration of insurance products within the society.
Oh, that's quite an interesting framework, Vikul, and I believe tech plays an important role here. We currently have more than 400 plus insurtech startups in the country, each serving different kind of customers with a different business model. Bimaplan, as we know, is targeting the underserved segment. I would like to know a little bit more about this, like how the entire Bimaplan platform is serving this segment.
Sudhanshu, as we have seen, traditional distribution channels are unable to serve the needs of this customer segment, and D2C or online doesn't really work because of poor awareness levels. So what we essentially do is we work with existing distribution chains, organizations which have a connect with this customer base and are selling some kind of product to these customers, right? So for example, a farm input company providing fertilizers or pesticides to farmers, or microfinance companies providing credit to rural women to start small businesses, or e-pharmacies or local clinics providing primary health care to people. Now, there is already a trust established between this organization and the end customer over years and years of relationship. What we do is, through our technology platform, leverage that, work with our insurance partners to design the right products, the right coverage, the right pricing models, and then manage the entire administration of those programs through our technology platform. It's a fairly complex process if you look at it, right? All the way from product design to underwriting to distribution, and then servicing, whether it's claims or any kind of value-added services, queries, and so on and so forth. I'll give you an example, right? We work with a rural e-clinic chain which provides primary healthcare services to people with less than 5,000 population, right? To villages with less than 5,000 population. Now these are very basic e-clinics with either a rotating doctor or a video consultation kind of a setup. Now the challenge is they can solve for most of the OPD needs or the primary healthcare needs of those customers, but they are unable to provide any solution for any kind of secondary or tertiary needs, meaning which would require hospitalization for the patient, and these patients then need to travel to the nearest town or city where there's a hospital and get that treatment done, and it's expensive. A lot of those people cannot even afford those kind of treatments, right? Now how do you cover that person, right? Essentially, can you first of all create a right product that serves the needs in a sustainable manner? Second, embed that product within the customer journey of that e-clinic, right? Or for that e-clinic, and therefore reduce your distribution cost to zero, fixed distribution cost to zero, because the infrastructure exists, the customer exists. All you're doing is connecting the two and adding a product through your platform in a seamless manner. And we've seen that very successfully kind of played out over the last 1 year or so that we've been working with them, where we've covered over 100,000 such customers, all in rural locations in Odisha, Jharkhand and Uttar Pradesh, right? And that creates a massive impact in the healthcare expense coverage for those people who did not have any means to cover those expenses earlier.
Thanks a lot for sharing more about Bimaplan, Vikul. And I believe we have served more than 1 million customers so far. And I'm sure you must have had your fair share of learnings about this particular segment. Can you share your thoughts around what kind of products or services work best for this segment?
So Sudhanshu, this is not a homogenized segment, right? When we talk about this underserved, different people working in different industries or different occupations in different geographies will have varying needs. And as a platform, we need to understand those needs and solve for those. So our focus is always to solve for a particular risk that is most relevant to that situation or that transaction, for that matter, right? As we learn more about these people, we keep on adding more products that are cross-sold to those people, therefore enhancing the overall coverage or financial protection that they and their families have. So typically the way it works is we start with one product through one partner organization that covers this a certain set of people, and then as we increase our our presence, awareness, the coverage of those people, we understand what other products are needed to serve their needs, and we keep on working with our insurance partners to provide those products to them. And the way it works is, like I mentioned, different occupations, different segments, verticals will have different needs. So it's a highly verticalized approach where you work within a sector and people employed in that particular sector, and you provide those offerings. And then there is a different sector. So, for example, a farmer, right? There are 120 million farmers in India, highly underserved, do not have health insurance or life insurance. The government has schemes for crop protection, but beyond that, the families still remain, financially unprotected, right? So there is a massive opportunity to reach that farmer and his or her family and provide the right set of tools and products. But that's a very different approach to providing products of, say, to the gig working platforms or gig workers of delivery platforms in urban centers, right? So we have to constantly learn about the needs of the end customer, come up with the right products, and seamlessly embed in those customer journeys and use cases. And that's sort of you build that muscle, within the team and within the platform, and enable, and therefore the platform is product agnostic, right? You can essentially underwrite any kind of risk and configure a product and sell it to embed it for those use cases today.
And not just the products, because I also feel there are a lot of other services, whether it's claims, kind of onboarding or something else that can make it much more easier for this segment to adopt insurance. What are the things that you and the team at Bimaplan have kind of thought about or have implemented to increase the insurance penetration in this particular segment?
You have to work on engagement. Most insurance companies, when they sell you a policy, they talk to you when they are selling you the policy or at the time of renewal, or if for a small subset of the customers who need to file a claim. But for all the others, there is no engagement that the insurance company has with their customers, or even the intermediaries have with their customers, right? And I think that's one of the biggest gaps that companies like ours are fulfilling. I'll give you an example, right? Now, hospitalization may be a rare incident in a policyholder's life, but doctor consultations or diagnostics or other such medical interventions are rather common. So what we've done is we work with a set of ecosystem partners to build these non-hospitalization medical offerings on the platform as well, that are bundled into the insurance, right? So which takes care of the holistic medical need of that customer or their family, right? Similarly, claims has to be a very simplified and easy journey. So we do a lot of intervention on that front, where it makes easier for the customers to autofill claim forms or pull KYC from the documents collected at the time of issuance, or help them do digital KYC for that matter, right? To get faster claims, or send them information over WhatsApp to understand the product better and to make the communication as well as the services much faster, right? And thereby reducing the pain and the time that a customer has to go through in realizing the benefits of their policy, for example, right? So all of those things, in addition to product innovation and distribution, really help in building that trust with the customer over a period of time.
And all of this is built on WhatsApp, including the claim processing.
Some bits on WhatsApp, some is online, some is, it depends on the channel that the customers, sort of comfortable with, right? You have to give the customer a multimodal sort of, so you have to give the customer multiple modes of being able to communicate with you and access your services.
Got it. Absolutely agree with you, Vikul, right? I feel the India DPI increase in internet penetration had a great role to play in India's financial inclusion journey. In fact, India's financial inclusion index stood at 60 as of March 2023, which is up from 56 in the previous year. And I believe it's the fintech companies building out of the country that are to be, have to be given the credit for this. We have also seen the emergence of human-assisted models over the last couple of years, right? And I feel that's crucial to serve the segment that's, has various trust issues. How do you think fintechs can leverage this, and how you at Bimaplan are looking at human-assisted models?
So we've established that the role of humans or organizations is critical because of the trust deficit that exists, at least in the short to medium term. And where technology is essential is in enabling those organizations or people to effectively sell better products to the end customer, right? So just to give you an example, we've seen companies like Turtlemint or Renewbuy or Insurance Dekho that enable the traditional agents to sell a wider variety of products and more number of products because their efficiency increases, their productivity increases, right? Similarly, if you take the case of an organization whose core product offering is not a financial product, right? They're selling farm inputs to a farmer, or the example of e-clinics that I gave you. Now, it's almost impossible for them to sell insurance in the absence of any kind of technology or in a purely manual way, because these are microtransactions. You do hundreds or thousands of transactions in a day for small amounts, and collecting those payments, doing KYC, reconciliations, all of that becomes a massive nightmare and eventually unviable in the absence of the right technology and the right tools that enable these organizations to actually sell. That's just one part of it, right? That's the selling and the product design and the distribution. But it's a bigger challenge when it comes to servicing and claims. We can't serve these many number of claims in a manual way. The cost would be humongous, right? So all these new technologies are helping companies, organizations automate a large number of these processes, and therefore making it more viable for them to sell insurance.
Do you also see, Vikul, that there's a demand and supply issue, that a lot of good founders actually don't pick up insurance because of the intense regulatory oversight on this space? Is that the case?
Yeah, it's insurance is a boring subject, and a lot of people don't know about insurance, right? And I think the regulatory burden deters founders from building in this space, because we've talked about how insurance comes after credit and after saving in the financial inclusion journey of an individual or a household, right? And therefore it is, to me, kind of intuitive that all of those sectors of fintech developed to this point and attracted more funding, and now that latent demand for insurance is increasing, the opportunity is becoming more apparent, and that will attract both founders as well as investors to back those founders building into this space.
So I think as we come towards the end of this interview, I think we have established the fact that while financial inclusion remains top priority, we cannot ignore risk mitigation tools, right? In the absence of insurance or kind of a protection against loss of income or life or health emergencies, I think it's going to be very difficult to drive financial inclusion for the underserved category.
Absolutely, Sudhanshu. I think it is most critical for us to focus on taking all segments of our society along as we build towards becoming a $5 trillion economy. And that can happen only when there is true financial inclusion for all segments of our population. And I think There is a lot of hope. There's a lot of work that is done by the central and the state governments and their schemes in providing healthcare coverage. So we are seeing the rollout of National Digital Health Mission, which will again increase the adoption of insurance. The central coverage schemes like Ayushman Bharat, which cover the below poverty line segment. So I think we as the private sector need to play our part and work within that ecosystem to provide the right products at an affordable price point. And that's what we at Bimaplan are striving to build and deliver.
Thanks a lot for taking your time, Vikul. I think this was really insightful. Hope we can have more such conversation going forward. And thanks a lot to your audience for watching this. We'll keep coming up with more such episodes. Have a great day and see you soon.